All right, everyone, welcome back for another deep dive. You ready to tackle something kind of different today?
Absolutely. Let's do it.
Taxes, UK tax returns, to be exact. It might not sound like the most exciting topic.
Well, maybe not for a party.
Definitely not. But seriously, folks, there's some really valuable stuff to unpack here. We're basing this deep dive on a blog post from MANCO accountants published just last week, explaining self-assessment and tax returns to clients, a clear and professional guide.
Sounds comprehensive.
It is, and surprisingly engaging. Honestly, there are some interesting facts in there and some smart strategies anyone filing a tax return in the UK should know.
Who doesn't like saving a bit of money on their taxes?
Exactly. So let's jump right in. The blog post starts by clearing up something important. Not everyone in the UK needs to file a self-assessment tax return.
Right. It's different from the pay system that most employed people are used to.
With payee, your employer basically sorts out your taxes for you.
Yeah, deducts it right from your paycheck. So self-assessment is really for people with more complex income situations.
Makes sense. So who exactly needs to file a self-assessment return?
Well, it comes down to how you earn your income. If you're self-employed, if you have rental income, any income from abroad, or if you exceed certain limits on things like dividends and investments, then you'll likely need to file.
Okay, so more than just your standard 9-to-5 job.
Exactly. It's about taking responsibility for reporting your income and figuring out your tax liability.
Like the blog post mentions with Jane.
Oh yeah, Jane the graphic designer.
She's self-employed, but she also earns rental income from a property.
Yeah,
So she definitely falls into the self-assessment category.
definitely. She has to be proactive about reporting all of her income to HMRC herself.
So it's not just filling out a form, it's a whole different way of managing your taxes.
Right, and a big part of that is keeping track of those deadlines.
Oh yeah, the deadlines. The blog post emphasizes those big time. So if you're still using paper tax returns, old school style,
You got to get them submitted by October 31st. The October 31st following the end of the tax year.
but if you're like most people and filing online,
Then you have a bit more breathing room. The deadline is January 31st after the tax year ends.
but there's a catch.
Always a catch.
The deadline for actually paying any tax you owe is always January 31st, no matter how you filed your return.
That's a key one to remember, and you really don't want to miss those deadlines.
Right, because HMRC isn't messing around.
No, they're not.
Yeah.
The blog post mentions they collected over £220 million in late filing penalties just last year.
Seriously, 220 million? That's a 5-year high.
Ouch. Imagine what you could do with that money instead of handing it over to HMRC as a penalty.
I'd rather not imagine. So let's say John is filing his online tax return for the 2023-2024 tax year. When does he absolutely need to have everything submitted and paid by?
January 31st, 2025. No ifs, ands, or buts.
Got it. Deadlines are officially seared into our brains. Now let's say someone's filing a self-assessment tax return for the very first time. What's step one?
First things first. You need to register with HMRC online.
Sounds straightforward enough.
It is. Once you're registered, they'll send you a unique taxpayer reference number, a UTR. Exactly. Think of it like your tax ID, essential for filing.
And the blog post mentions that MANCO accountants can help people through this whole process.
Yeah, especially for first-timers. Having expert guidance can be really helpful.
So once you've got your UTR, what's next?
Time to tackle the tax return itself, which starts with gathering all your income and expense records, anything that could affect your tax liability.
So get those spreadsheets ready.
Exactly. HMRC has an online service to make things easier. And remember, transparency is key. Declare all your income from every source.
No hiding anything under the rug.
Nope, not even those little side hustles.
Makes sense. Speaking of different income sources, remember Sarah, the freelance photographer?
Oh yeah, Sarah. She's got invoices from clients, pay slips from a part-time job, and receipts for all her photography equipment.
All part of the self-assessment puzzle.
Exactly. And those receipts are super important. She can claim those expenses to reduce her tax bill.
So keeping detailed records is crucial.
Absolutely. You need to prove to HMRC that those expenses are legit and work-related.
So being organized pays off, literally.
It really does. It's like a treasure hunt for tax savings.
Okay, I'm getting motivated to organize my receipts now.
That's the spirit. But there's more to tax efficiency than just allowable expenses.
Oh, there's more. Tell me everything.
We've got allowances and reliefs to talk about, too. Different ways to potentially reduce your taxable income.
And less taxable income means less tax to pay.
You got it. And that's what we'll dive into next. how to make those allowances and reliefs work for you.
Sounds good. I'm all ears.
Allowances and reliefs.
Yeah.
They're like secret weapons for tax saving.
Regular weapons. I like the sound of that.
Everyone in the UK has a personal allowance.
Right. That's the amount of income you can earn before you start paying tax.
Exactly. And on top of that, there are all sorts of other allowances and reliefs depending on your circumstances.
Like what?
Well, if you're married or in a civil partnership, you might be able to transfer some of your personal allowance to your spouse.
Oh, interesting. So if one person earns significantly more than the other.
Exactly. It can help balance things out a bit tax-wise.
Smart. And what about pension contributions? Those are important too, right?
Absolutely. Pension contributions are a great way to reduce your taxable income and save for retirement.
So you're basically getting a tax break now and setting yourself up for the future.
Exactly. It's a win-win situation.
Okay, so we've got allowable expenses, allowances, and reliefs all working together to lower our tax bills. What else can we do to be super tax efficient?
Well, the most important thing is to make sure you're claiming every single deduction you're entitled to.
No leaving any money on the table.
Exactly. We've talked about some of them already, but there might be others that apply to your specific situation.
Like what?
Charitable donations are a good example. You can often deduct those from your taxable income.
So giving back to a good cause can actually save you money on your taxes.
Exactly.
That's a nice little bonus.
I like it.
Yeah.
But we also need to be careful about scams. Right?
Oh, absolutely. The blog post mentions that almost half of the scams reported to HMRC were fake self-assessment rebates.
Wow, that's a lot. So
Yeah.
how do we avoid falling for those? Always stick to trusted sources like HMRC's website or a qualified accountant. Don't believe those promises of easy money or guaranteed refunds.
If it sounds too good to be true,
It probably is.
good advice to remember. Speaking of HMRC, they've actually launched a new online tool to help people figure out if they need to pay additional tax.
Oh yeah, I saw that.
Yeah.
Seems like they're trying to make things a bit easier for taxpayers.
Which is good because, let's be honest, taxes can be confusing.
No doubt about it.
Hmm.
But with the right information and resources, it doesn't have to be a nightmare.
Well said. So let's shift gears a bit. The blog post mentioned that over 11.5 million taxpayers filed self-assessments in 2023.
That's a huge number.
It is. What do you think is driving that trend?
Well, I think it's a reflection of the changing landscape of work.
How so?
We're seeing more and more people moving away from traditional employment and embracing things like freelancing, the gig economy, entrepreneurship.
So self-assessment is becoming less of a niche thing.
Exactly. It's becoming the norm for a growing segment of the population.
And what does that mean for individuals?
It means taking more responsibility for managing their finances and understanding their tax obligations.
It's not enough to just rely on an employer to take care of everything anymore.
Right. You have to be proactive and informed.
And for policymakers,
It raises questions about how the tax system needs to adapt to this new reality of work.
how do we ensure fairness and efficiency when more and more people are earning income in non-traditional ways?
That's the big question. And it's not just about taxes either.
What do you mean?
This shift towards self-employment and freelancing also affects things like Social Security, pensions, healthcare.
Wow. So this seemingly simple blog post about self-assessment has actually opened up a whole can of worms.
It really has. It's all interconnected.
So much more than just filling out a form.
Absolutely. It's about the future of work and its impact on our society.
Yeah.
It really is. A whole can of worms. But fascinating stuff to think about.
Absolutely. So we've covered a lot of ground today.
We have, from the basics of self-assessment to the changing nature of work and what it means for all of us.
If you're feeling a bit overwhelmed, don't worry.
It's a lot to take in.
It is. But remember, the whole point of these deep dives is to break down complex topics and make them accessible.
Exactly. We want to empower you with knowledge.
So you can make informed decisions about your finances.
And your future.
Right. So if you're one of those 11.5 million people filing a self-assessment tax return,
Or if you think you might need to in the future.
there are resources out there to help you.
Starting with HMRC's website.
They have tons of information and guidance,
And don't hesitate to reach out to a qualified accountant.
especially if you have a more complex situation.
They can provide personalized advice and support.
So remember, folks,
Filing your taxes doesn't have to be a nightmare.
with the right knowledge and a bit of preparation,
You can take control of your finances and make sure you're not overpaying.
and who doesn't love saving money?
Exactly. So until next time, happy filing, everyone.
And remember, taking control of your taxes is a key part of taking control of your financial future.